Good morning. Happy Friday. Happy Friday. Okay, so before I forget, if you're watching this recording, please skip forward about a minute to get to the content. Uh, y'all know when I be trying to multitask, it just don't go well. But that's okay. So when you pop on, let me know who you are and where you're from so I can say good morning to you. All right. Okay. So here we go. First, I want to welcome you to the Daily Revision Morning Show. My name is Lysandra Everett. I'm your host. I am here Monday through Friday, 9 o'clock-ish. When you tune in my show, you're definitely going to hear about tax topics as I am a tax professional, but you also hear about other stuff too, leadership and business and, I almost dropped my phone, and just how to do this whole thing called life better. But this season is tax season, and so I have spent the whole week answering tax questions because it's tax season. Everybody is focused on taxes, right? So I wasn't able to be on yesterday. I actually had an eye exam that threw my whole day off. Hi, good morning, Valerie. Hey, Miss Arvella. And I was not able to be on yesterday. You know, an eye exam and any other normal day would take about an hour. I wound up spending 2 hours getting an eye exam. Who was not happy? This girl. Okay. All right. So today's question was about rental expenses. Okay. I have a friend of mine who has rental property and she wants to know really how can we decrease the tax liability on rental income. So I've got my notes here. When you see me looking down, it's because I can't keep all of this stuff in my head. That's not how our minds were designed to work, by the way. All right. So, one of the things that you want to do if you have a rental property is to make sure that you're taking all of your deductions. And I'm going to list a few of them here as far as deductions go. If you've got a mortgage on the property, you can take a deduction for taxes paid. Interest paid on the mortgage. You can also take a deduction for any state and local taxes that you have to pay for the property. One of the things that a lot of people don't do is to write off their travel expenses for going to look at their property, because especially, we're military, we have a rental property and very rarely do we live near our rental property. So it takes a special trip to go and check on your stuff. And you always want to do that just as as a good practice once a year to go check out your rental property, make sure it's still standing. You might have a property manager, which that fee is also tax deductible, but nobody is really going to take care of your property the way that you will. All right. And I'll give you a prime example. 2 years ago, we went to go look at our rental property and according to the property manager, everything was hunky-dory. The property was in good condition. We walked in that house and I promise you I almost lost my religion, okay? I was very upset at the things that I saw. And when I say stuff, I mean, there was, in one of the closets, they had duct tape holding... They had duct tape holding the racks together, the shelving units that you put in your closet. At some point, somebody had duct tape holding this stuff together, and we had our property manager telling us, oh, the property was in fabulous condition. No, it was not in fabulous condition. So when you go to visit your rental property, first of all, you want to make it a practice to visit your rental property on a regular basis. And when you do, then you can write off that expense to go and check out your property. Hey, Sonia, girl, I'm talking about deductions for landlords, honey, to reduce this tax liability. Okay. So we've talked about mortgage interest. We've talked about state and local taxes, and make it your business to go and visit your rental property on a regular basis. And when you do, you can write that expense off as well. Repairs. Now, there are two different types of repairs. There's a repair that's going to fix something, and then there's the major repairs. All right. Now, you really want to try to fix things when they're broken because you can write that off as an expense. But if you're talking about a major repair, let's say you have to replace a roof, then that is something that has to be depreciated over time. So it really is better for you year to year to write off those repairs. So if you've got to repair a shingle or two, it's better to do that than to wait and replace a whole roof because you've got to depreciate the roof. And I want to say the lifespan of a roof is 27 and a half years, but don't quote me on that. So when you look at writing off the price of a roof over almost 30 years versus the repairs when they happen, it works out better for you financially. Make sure that you are writing off insurance premiums. If you have to pay any utilities, so when your property is not rented, 9 times out of 10, you're going to have to leave some utilities on, whether it is the water or the gas and electric, depending on how the home is heated. You're going to have to leave that stuff on so you can write that stuff off. Write those expenses off. Your property, if you have a property manager, those property management fees are a tax deduction as well. If you have any homeowners association fees associated with your property, if you have any type of fees like that, you can write those things off. Any operating expenses. I mean, there is a laundry list of them. Advertising. Now, if you have to advertise your own property for sale, then you can write that off. Now, we have a property manager that when our property is being advertised for rent, that they handle all that. So we don't have any specific advertising costs. We pay them to do that. But if you're doing it on your own, just know that those advertising fees are also tax deductible. Any commissions that you have to pay, if you have to pay a real estate agent to help you rent your property, those commissions are also deductible. Now, I will tell you what, there are some real estate commission fees that's off the chain. Like up here in this area, this is one of those things that almost all the air left the room. All right. So when we move, we usually work with a realtor to find a rental property, or there's some easy way to find it. Moving up here, they wanted us to pay 1 full month's rent for them to help us find a place to live. So that's 1 full month's rent for the realtor, and first month and deposit for the place that you're renting. So 3 months rent up front. I was like, yeah, no, that's not happening. So total side note that has absolutely nothing to do with what we're talking about. Just know that if you have to pay a realtor to help you rent your property out, that those fees are tax deductible. Okay. Now, so, the main thing is that in order to reduce your liability, your expenses and deductions are going to have to be on point, because you really don't want to pay more than you have to. I totally get that. But when you're talking about a rental property is really considered passive income. Although you are actively involved in dealing with the property and stuff, you really are not that involved. So there isn't a whole bunch of ways to reduce your rental income, because it's not like you are doing a lot of this work yourself, unless you are. Then you're going to have mileage expenses and all of that. You're going to have more of the, like I said, advertising fees and everything. So you really want to make sure that you are advertising your deductions. And again, the repairs versus depreciation are what's really going to help you year by year, because as the years go, that depreciation gets smaller and smaller, and it's less of a benefit to you. But you also, and rents go up, and especially if you put in a large expense to keep your rental property up, then you're going to want to increase the rent to help recover some of that cost. So if you've got more money coming in, of course, you're going to have more. You're going to have more income, and more income equals more profit and more tax liability, right? But, as a whole part of your portfolio, you really want to make sure that, with all of your income, that you're maximizing where you can put your money to have a lower tax liability. Do you have a retirement account that you can put some money in to be taxed later on, or taxed at a lower rate? One of the things too, and here's one that's really going to get you. Okay. So for your rental property, and especially if you have children, right? One of the things that you want to look at doing later on is letting your kid or somebody live in that house for 2 years before you sell it, okay? If it gets to that point that you want to sell it, because if you just sell it as an income producing property, you're going to be taxed on all of that, on all the profit, versus if you have someone living in that property before you sell it for 2 out of 5 years for regular people. For military, I want to say it's 2 out of 10. But you want to have them living in that house for 2 years, because you get to you have a deduction $250,000 that you're not taxed on. Okay, so that's one of those. Let's think about that ahead of time, because I know with our son, with the rental property that we have, one of the things that we want to do, as we coax him into where to go to college, so he can have a place to stay. So we ain't got to pay for, so we're not having to pay for dorm fees and such, but for him to be able to live in this house while he's going to school, because then that's, if, we can sign that property over to him. And, if he sells it, then again, it's not going to be, he's at this point, $250,000. I think that's what it is. I got a bunch of numbers running around in my head. So I will tell you now, make sure you consult with your tax advisor, because it's tax season, and tax people, we just got numbers running everywhere. But what you want to take from this is that if you have a rental property that, at some point you think you'll want to sell, you want to try to have someone like your child or somebody that can live in that house, and you can have mail sent to that house, so that you can live in that house for 2 years to really save on the tax liability on the profit that you make from it. So I hope that makes sense, because I got stuff to do. Let me think. Okay. And so also there is a limit on, a limit on loss. So the limit on loss is 25,000. Yeah. So you can only take up to $25,000 in a loss on a rental property per year. So if you have more than that, the upside is you can take loss forward, but operating at a loss is just never good anyway. But just know that if you have more than a $25,000 loss, you can carry that loss forward to another year, which might actually help you when you have a higher profit for that property. Okay. So I really hope that helps you out for all my rental property people, okay? But listen, above and beyond, having rental property is good, okay? If you have a property that you can rent out and generate income from, that is good, because you have increased your net worth. Yes, rental property is a pain in the butt. I will be the first to admit it, but it is worth every single cent as you increase your net worth and you build a legacy for your family that includes real estate, because God ain't making no more dirt, honey. And it's best that you have, I don't care if it's a teaspoon, make sure you have some, get you something that appreciates and that will continue to generate cash flow for you. Okay, so thanks so much for tuning in today. I also want to invite you to the Winning Women Network midday call today. We have a spotlight guest, Miss Stacia Kennedy, and the number to that is 425. I'm trying to do this, 425-209-1919 at noon Eastern time. And if you're watching this recording and you happen to miss Stacia, that's okay, because we record these things and you can get access to them. And it's really great. We always get something good out of it. Hey, Deetra, good morning. So that's it for me, guys. I hope you all have a fantastic day. It is going to be raining all weekend up here. Isn't that nice? So, but that's it for me, you guys. Thanks so much for tuning in, and I hope you got some good information. Make sure you click my live notifications so you don't miss anything. All right, I'll see you guys next time. Bye.